welcome to the YesOption Weekly Analysis. My name is Cassandra Noy, and here's the latest for Wednesday, the 23rd of April. Until Tuesday night, it has been thin holiday trade, with most markets closed Friday and Monday for the Easter holiday period. But a series of recent data releases from the world's three largest economies boosted volume and volatility levels. In the US, the world's largest economy, stocks rose for 6 consecutive days, and again last night as the Richmond Fed Manufacturing Index jumped to 7 this month from a reading of -7 in March, while existing home sales, although falling, still beat market expectations. In China, the world's second largest economy, HSBC Flash PMI rose to 48.3, but still under 50 for a 5th consecutive month, which indicates an economy in contraction. This signals persisting weakness and makes room for government intervention. In Japan, the third largest economy in the world, Bank of Japan Governor Kuroda said in parliamentary testimony that the Japanese economy is still on track towards the stable 2% inflation goal, and that once it is reached, support to fiscal policy will also wane. In relatively stable currency markets, the Australian dollar was the largest mover, falling nearly 1% against the US dollar, hitting a 2-week low after consumer price inflation in Australia rose less than expected for Q1. Elsewhere in the currency markets, the greenback swung from small losses to small gains in thin holiday trade, while the Chinese yuan fell to a 16-month low on manufacturing data and speculation of Chinese government intervention. In stocks, better than expected earnings reports in the US from McDonald's, Netflix, Morgan Stanley, General Electric, and Yahoo helped push US indices to 6 days of gains, its longest rally since September. In Asia, it has been a mixed affair, with the Shanghai Composite hitting its lowest mark since December 2012, on the continued weakness in the Chinese manufacturing sector. Meanwhile, the Nikkei 225 rose more than 1% on Kuroda's steady as she goes comments. European markets opened with gains after the extended Easter break, despite heightened tensions in the Ukraine, as the risk-on sentiment spread from the US into Europe. In the commodity markets, gold ended the week down 2.77% at a 2-month low, and silver down 1.59%, as precious metals came under pressure after upbeat US data and comments from Fed Chair Janet Yellen. Her hawkish comments dampened gold's safe haven demand, boosting the USD, which trades inversely to gold. Natural gas soared to a 7-week high after US inventories grew at a slower than expected pace, as severe weather conditions in the US saw stockpiles fall to an 11-year low. Meanwhile, tensions in the Ukraine helped crude oil hit its 6-week high, as talk of sanctions in Russia, the world's second largest exporter of oil, overshadowed the largest inventory stockpile in the US since March 2001. So what's in store for the week ahead? A busy economic calendar in the UK, Eurozone, and North America should ensure trading levels and volatility pick up after a quiet previous week. The YesOption team of analysts has picked out Wednesday's expected falls in Canadian retail sales data to make put options as a good profit opportunity. On Thursday, a decline is expected in US durable goods orders, which should see put options on the USD a profitable choice. On Friday, a large decline is expected in the UK retail sales data, which should see put options on the British pound a good investment. Remember, at YesOption, making call and put options can generate returns of up to 89% in as little as 60 seconds every trade. So start profiting today. That's all from me, Cassandra Noy. Be sure to tune in, same time, same place, for the latest YesOption weekly analysis.